Welcome to the deep dive. Today we're zeroing in on AIA Group, the big player in Asian life insurance.
That's right. Largest independent Pan-Asian life insurer operating across, 18 markets.
Exactly. And for you, our listener, if you want to quickly get a real handle on a specific business, well, we're about to unpack their latest annual report.
Yeah, our mission today is pretty straightforward. Distill AIA's 2024 annual report down to the essentials. We'll look at their business segments, how they perform financially, and their plans for creating shareholder value.
Sort of shortcut to the key insights, right?
Precisely. Saves you wading through hundreds of pages. Our source is, naturally, the AIA Group annual report for 2024.
Okay, let's jump right in then. AIA has this really wide footprint across Asia. Can you maybe give us a quick sense of where they operate and then maybe how the different bits performed last year?
Absolutely. So AIA's reach, it covers Pan-Asia, 18 markets in total. Key ones include mainland China, Hong Kong SAR, Thailand, Singapore, Malaysia, Australia, and then others like Cambodia, Indonesia, Myanmar, New Zealand, the Philippines, South Korea, Sri Lanka. Quite a list.
Wow, yeah.
And to gauge performance in 2024, we look at two main things. Value of new business VONB. That's basically the present value of expected future profits from new policies sold.
Right, the future value today.
Exactly. And annualized new premiums, or ANP, which is the total value of premiums from those new policies sold during the year. Overall, AIA did well. A strong 24% growth in VONB and a pretty significant 35% increase in ANP.
That's really impressive growth. Were there any particular markets that, really stood out in driving those numbers?
Yeah, several did. Mainland China, for instance, saw a solid 20% increase in VONB. That was fueled by both their agent network and their bank partnerships, bank assurance.
Right.
And interestingly, their profit margin on those new sales also went up by almost 5 percentage points, actually, to 56.1%.
Wow. Why was that?
While it was largely driven by a strategic shift, they focused more on tax-incentivized retirement products, which, tend to be more profitable.
Makes sense. What about Hong Kong?
Hong Kong also showed strong VONB growth, benefiting from their premier agency, their top agents, and also partnership distribution. In fact, the partnership VONB more than doubled there.
Double.
Yeah, significantly boosted by a new exclusive deal they struck with the Commercial Bank of Ceylon PLC. And then Thailand, Singapore, and Malaysia also reported excellent VONB growth.
Yeah, and the other markets, how did they fare generally?
The segment they call Other Markets, which includes their significant 49% stake in Tata AIA Life over in India that also showed strong VONB growth pretty much across the board.
Okay.
It's probably worth noting, though, that while Tata AIA Life's figures were rolled into these numbers, AIA's stake in China Post Life, that's 24.99%, it's accounted for differently. It's not in these VONB and ANP figures we're quoting.
Got it. Any others worth a quick mention?
Yeah, Taiwan. China had excellent VONB growth, mainly coming through independent financial advisors and brokers. And Vietnam showed strong growth, too, driven by, more productive agents and a shift towards protection products.
Okay, so a generally positive picture across their operations then. Now, the report talks about AIA's plans for growth. What are the main strategies they're pushing?
Right, so AIA's growth strategy, it rests on a few key pillars. Their premier agency model is really central.
The agent network focus.
Exactly. Big focus on recruiting, high caliber people, giving them loads of training, and equipping them with digital tools to be more efficient, more productive.
And they seem pretty successful at that.
Very. It's actually quite notable. AIA has held the top global ranking for the number of members in the $1 Million Roundtable.
The MDRT. That's a big deal in insurance, right?
Huge benchmark, yeah. They've been number one for 10 years straight. And AIA, China, Hong Kong, and Thailand are actually the top 3 companies globally by that measure. Plus, they've got the leading agent position in 9 of their markets.
That definitely underlines the strength there. What other strategies are in play?
Well, they're also quite strategic about partnering with banks, selective bank assurance agreements, to broaden their reach.
Yeah.
And digital transformation is another major focus. They're really expanding their omni-channel approach.
Omni-channel meaning?
Basically improving their digital capabilities and their online to offline model O2O to generate leads and then convert them into customers.
Now, is that paying off?
Seems to be. They saw a 61% increase in ANP that originated from digital channel leads and wait for it, 72% rise in new customers sourced through digital means just in 2024.
Wow, that's significant. Any examples?
Yeah, like their partnership with TNG Digital in Malaysia. That targets higher income e-wallet users. And in Thailand, they're using an AI-based engine to, score leads and identify the promising ones better.
Sounds like they're really leaning into digital then. What about health and wellness? That seems to be a growing area for insurers.
It is, and it's another significant area for AIA. They've got their AIA Vitality program, which you might have heard of, plus an integrated healthcare strategy and partnerships with preferred provider networks. Things like AIA Malaysia's Smart Option or AIA Hong Kong's Optima CEO. The aim is to provide access to quality, affordable healthcare. They've even launched things like the Signature Healthcare Circle, a kind of a one-stop health concierge service.
So quite a multifaceted strategy. Did the report mention any potential headwinds, challenges?
Yes, it did acknowledge the, near-term uncertainty, geopolitical stuff, macroeconomic environment in Asia. That's flagged as a potential challenge.
Understandable. That kind of environment can affect consumer confidence, business activity generally.
Exactly. It's something many global businesses are navigating right now.
Okay, let's maybe switch gears a bit to their financial performance. The report mentions they adopted new accounting standards, IFRS 9 and 17. How does that affect things?
Right, so starting from 2022, they adopted IFRS 9 and IFRS 17. These are pretty major changes in how insurance contracts and financial instruments get accounted for. The goal is more transparency, more consistency.
Right.
So the figures we're talking about for 2024, they're all under these new rules, just important context.
Good to know. So keeping that in mind, what were some of the key takeaways from their income statement for 2024?
Well, they reported a record operating profit after tax OPAT. That's a key measure of their underlying profitability. It hit US $6,605 million. That's up an impressive 12% per share.
Record OP, okay. And the new business figures.
Also strong. Value of new business, the VONB, reached US $4,712 million, up 18%. And their VONB margin, the profitability of that new business, also improved to 54.5%.
Nice margin.
Yeah. And annualized new premiums grew 14% to US $8,606 million. Their total weighted premium income TWPI, which reflects total premiums weighted for profitability, that saw a 13% increase to US $42,841 million.
So those are some solid growth numbers across the board. What did the report say drove this strong performance?
It really pointed to two main things. First, that strong and profitable growth in their new business that we just talked about. And second, just disciplined execution of their overall strategy.
So basically attracting good business and running the company well.
In a nutshell, yes. Their ability to bring in valuable new customers and manage operations effectively seems to have been key.
Okay, let's move over to the balance sheet then.
Yeah.
What were the key indicators of financial health at the end of 2024?
Right, balance sheet. As of December 31st, 2024, their embedded value equity, EV equity, which is the present value of future profits from existing business plus adjusted net worth.
Got it.
That stood at US $71,626 million. That's after paying out dividends and buying back shares. Before those shareholder returns, it was actually US $78,104 million, showing a 13% increase.
Okay, so strong underlying growth there too. What about shareholder equity?
Shareholders allocated equity, a more traditional measure, was US $44,404 million after dividends and buybacks. Before those, it was US $50,882 million, which is a 6% per share increase. And comprehensive equity, which includes things like unrealized gains and losses, hit US $87,600 million, up 4%. That works out to US $8.12 per share, a 10% increase.
And leverage. Did that change much?
Their leverage ratio was 13.1%, a slight tick up from 12.1% in 2023, but still generally seen as a comfortable level.
Okay. And what about cash flow? You mentioned underlying free surplus generation earlier. How did that look?
Yes, UFSG. That's a key measure of the actual cash generated from their core insurance operations. It came in at US $6,327 million for the year, showing a healthy 10% increase per share.
So strong cash generation from the business itself.
Exactly. Demonstrates a strong ability to generate cash from their ongoing operations.
Okay, and finally on the financials, what about profitability ratios and capital strength?
Right. Their operating return on embedded value, ROEV, a key profitability metric for insurers, saw a really significant increase. It went up 200 basis points to 14.9%.
That's a jump.
It is. And their capital adequacy ratios look very strong, too. The group LCSM coverage ratio, that's based on local regulations, was 257%, very healthy. And the Tier 1 group capital coverage ratio, an international measure of core capital strength, was also robust at 349%.
Solid capital buffers then.
Definitely. And it's worth remembering they also set a target back in August 2024. They're aiming for a 9 to 11% compound annual growth rate in OPAC per share over the 3 years starting then. Shows their ambition.
Right, okay. So that paints a picture of a financially strong, growing company. Let's talk about shareholder value directly. How does AIA plan to return value through things like dividends and share buybacks?
Certainly. So dividends first. For 2024, they propose a final dividend of 130.98 Hong Kong cents per share. That's a solid 10% increase compared to the 119.07 each K cents paid for 2023.
Nice increase for dividend holders. What was the total payout?
Total dividends paid out during 2024 amounted to US $2,328 million, just slightly up from US $2,293 million the year before.
Okay. And they've also been pretty active buying back their own shares, haven't they?
Oh, yes, very active. Their share buyback program returned a significant amount of capital in 2024, US $4,150 million in total.
That's quite a bit more than dividends.
It is, and it's a notable increase from the US $3,637 million they returned via buybacks in 2023.
How many shares did they repurchase?
The number of shares also went up substantially, from 374 million shares in 2023 to 571 million in 2024. It really demonstrates a clear and disciplined approach to managing their capital and a commitment to boosting shareholder value through both dividends and these buybacks.
Sounds like a well-defined strategy for rewarding investors then. So as we look ahead, putting it all together, what's your kind of overall assessment of AIA's business and its future prospects based on this report?
Well, looking forward, AIA themselves clearly express confidence. They seem sure about achieving that 3-year OPAT per share growth target we mentioned.
The 9 to 11% CAGR.
Exactly. And they rightly highlight, I think, the significant long-term growth opportunities in Asian markets, driven by major demographic shifts, social trends, things like rising middle class, aging populations, growing health awareness.
Big tailwinds for insurance.
Potentially, yes. And AIA believes their strategic focus, their competitive strengths like the agency, the digital push, position them really well to capitalize on these opportunities.
Were there any potential challenges or maybe areas that might need watching in the future mentioned?
The report does mention one thing specifically, the implementation of Pillar 2 legislation.
The global minimum tax rules.
Right. That's going to come into effect in more regions from 2025 onwards. And the report notes it could potentially have an adverse effect on AIA's overall effective tax rate.
Where might that impact be felt?
Well, they mention possible effects in Hong Kong and mainland China, where the specific legislation isn't even finalized yet. And there's still some uncertainty in quantifying the exact impact in other key markets like Singapore and Thailand. So something to watch.
Okay, a potential tax headwind down the line. Anything else?
Not explicitly flagged as a major challenge, but they do reiterate their commitment to responsible compensation practices that align with stakeholder interests. Always important.
Right. So just to summarize our deep dive then, it seems AIA had a really strong 2024. Good growth across their key business areas, robust financial results came through. They've got clear strategies laid out for future growth, agency, digital, health, and also for returning value to shareholders via dividends and buybacks. And they sound pretty optimistic about the long-term Asian market potential, even while acknowledging some maybe near-term uncertainties.
Yeah, that sums it up well. They've shown a strong ability to execute, grow the business, and manage their capital effectively in what is a very diverse and dynamic region.
Well, this has been a really insightful look into AIA Group's 2024 performance and plans. And for you, our listener, thinking about AIA's really significant growth in digital channels and that increasing focus on health and wellness initiatives. It prompts an interesting thought, doesn't it? How might the whole life insurance landscape in Asia really fundamentally change over the next decade? If you want to dig deeper yourself, we definitely encourage you to explore AIA's full annual report for a more comprehensive view. Thanks for joining us on The Deep Dive.